So we will be talking about cash basis and accrual basis of accounting. So first we should differentiate. So you have cash basis and accrual basis. Under cash basis, income and expenses are recognized when cash is received and when cash is paid. On the other hand, for accrual basis, income and expense are recognized every time income is earned, regardless when cash is received, and when expense is incurred, regardless when paid. So what is mandated by PAS 1 is for the financial statements to be prepared under accrual basis of accounting. And so, at the end of the year, if an accounting financial statements was prepared under cash basis, it should be later converted under accrual basis. So you have cash and then you have accrual. So for this to be easy, it's important that you should revisit the basic journal entries, adjusting entries, and especially the T accounts. Knowledge of those items will be very useful, especially in solving problems. So we'll immediately start with the problems. Now, problems under this chapter are normally focused on the T accounts. Sometimes they mixed up T accounts. Then we have what we call the double T accounts and those problems which requires analysis. For me, I normally classify it under these four classifications. So you have those problems which includes basic knowledge for T accounts. So for example, basic example are accounts receivable, credit sales, written off accounts, collections. Then there are those items which involve multiple accounts. Problems under this classification normally includes question about cost of goods sold, where the purchases should be computed using another T account, which is accounts payable. And then I have this is my own understanding. I have what I call the double T accounts, which I will explain later. And there are also those problems which require deeper analysis or deeper understanding before you can answer it. So problems in the book of VALIX, I divided it or classified it rather under these four classifications. So you have for T accounts, you have 14-2, 14-3, 14-4, 14-5, 14-6, and 14-11. Multiple accounts, you have 14-9 and 14-10. For double T accounts, you have 14-1, 14-12, 14-17, 14-21, and 14-22. And lastly, you have 14-7, 14-8, 14-13, 14-15, 14-16, 14-18, 19, and 20. We will not solve everything so that you have some problems that you can practice on. So for the first classification, we will only answer 14-2, 14-4, 14-6, and 14-11. For multiple accounts, we will answer both. They are actually good problems. Double T accounts, we will have 14-1, 14-17, 14-21. And for the final classification, we'll have 14-7, 14-8, 14-18, and 14-19. You're free to use any method you want. I will only share what I deem as a shortcut or an easier way of solving problems. So we'll start first with the T accounts. So first we'll have 14-2. That's Q Company. So Q Company Service Organization had 200,000 in cash sales and 3 million credit sales. The account receivable balances were 400,000 and 485,000 on December 31, 2018 and 2019 respectively. the entity desires to prepare a cash basis income statement, what amount should be reported as sales for the current year? So we know that under cash basis of accounting, what we deem as income are those cash receipts. Okay. So common mistake though committed by student is that they only treat income those which were collected from AR. Okay. That would be wrong. You need to add also the cash sales. So that's cash sales plus cash collections. So the T account we will use, it would be accounts receivable. Okay, beginning balance is 400,000. Ending balance is 485,000. Now I know there are some teachers that would put the ending balance on the same side, on the debit side, because that's the normal balance of accounts receivable. But for me, I'd rather put it on the opposite side so that when we compare, okay, we compare debits and total credits, we will still maintain the equality. So you have 400,000 beginning balance and 485,000 ending balance. And then we have it had 3 million credit sales. So remember, how do we journalize it? The credit sale transaction? We debit AR, then credit sales. So AR is debited. That's why we put 3 million in AR. And then we compute for the cash collections. So what would be the entry for cash collections? Debit cash, credit AR. So if we're looking for the cash collections, then we look at the credit side of AR because AR is credited. So use your calculators, you'll have 400,000 plus 3 million minus 485,000, that would give you 2,915,000. That's the cash collection from AR. But we will not stop there because the problem provides us for a cash sales amounting to 200,000. So you add 200,000, you will get 3,115,000. Okay, so that's letter C. So if you notice, we just used one T account. Okay, one T account, then solve for the cash collections, add it with the cash sales in order to get the correct answer. So most problems involves that type of line of questioning. So what's important is that you know where to put the beginning balance and ending balance, where to put the credit sales in the collections, and you'll be able to answer. So next would be 14-4. 14-4, this Jacqueline Company began the current year with accounts receivable of 1 million, allowance for doubtful accounts of 80,000. During the current year, the following events occurred. You have the given information. At the end of the current year, the entity showed the balance of accounts receivable amounting to 1,680,000. Question is, what amount should be reported as sales? So there are no other items given. You only have accounts receivable. So in this case, we'll only use AR. So beginning balance for AR is 1 million. Ending balance is 1,680,000. Then you have sales on account 3 million. And then you have accounts written off 120,000. So the question is the same. Compute the income to be reported under cash basis. So as we know, under cash basis, we add cash collections from AR and cash sales. So first we determine the cash collection and later on we add cash sale. So using this, you'll have 1 million, 1 million plus 3 million minus 120,000 minus 1,680,000. We'll have a balance here of 2,200,000 representing cash collections. So that's cash collections from AR. You add cash sales amounting to 500,000, a total of 2,700,000. That's letter A. So if you'll notice, you have there given the beginning balance for allowance for doubtful accounts. Now, normally you will not need the T account for allowance for doubtful accounts because you already have the information regarding accounts written off. However, if this is not given, okay, if this is not given, you will be able to determine this using the T account for a ADA, or allowance for doubtful accounts. So you put the beginning and ending balance, you put the recoveries if there is, and doubtful accounts expense for the current year, and you determine the accounts receivable written off. Okay, you will need that before you can have this ART account. So the ADA, or allowance for doubtful accounts T account, will only be necessary if the accounts written off is not given. In this case, it's given in the problem, so there's no need to look for it. So the next one is